This is Tom Asprey with the Viper Report Market Wrap video for November 8th. Scales tip to the bulls. In last week's video, I talked about the analysis of the advanced decline line, which I reviewed going back to 2000, that suggested that stock prices were going to move higher after the election, no matter who won. It was posted before the election on Forbes.com, where I'm a contributor. If you want to find my articles, Forbes:Tom Asprey, you'll see this list, and I always advise people, if they're going to follow somebody, look back at what they've said in the past. So this gives you the opportunity to go back to 2011, or if you have insomnia, it's a great aid. So here's the article I was talking about. Which I hope you'll read fully on your own. This chart of the New York Composite, the weekly chart, shows the powerful trend up and the fact that we'd corrected for 2 weeks. But most importantly, below here in red is the NYSE All Advanced Decline line that broke out strongly early in the year, which indicated higher prices, and it has continued to lead prices higher throughout that, and we'll look at a new chart shortly. That's a very positive pattern, and as I said then, despite what craziness takes place over the next few days or weeks, this analysis indicates that the stock market will stay strong into 2025 and move higher no matter who is elected as the new president. Also discussed last week was the strong influence of the bond market had over stocks since the September lows. Yields have gone up and stocks have gone up as well. We talked about the signs that maybe the rally was running out of steam. That now appears to be the case, but more evidence will support that. This is a weekly chart of the 30-year bond yield. You can see it's a reversal bar formed last week as yields closed lower after shooting above the 4.60 yield. If you look at the daily chart, you can see this is the downtrend we broke, pushed to a new high, stark bands, etc. So it is a high risk time to buy, a low risk time to sell, and yields pulled back from the Wednesday highs back to the 20-day EMA. More importantly, the MACD lines have turned negative, and the MACD histogram, it had been diverging going into the highs, it has also turned negative. That's consistent with the top, but does not rule out another push higher in yields for a week or so even before there's a more significant decline in yields. This daily chart of the 10-year T-note yield is one that most people follow and is more reflective of mortgage rates. Also appears to have topped out, hit a high of 4.477%, closed at 4.306. MACD lines have crossed lower highs in the MACD HIS. So, once again, support around 4.225 down to 4.136, and then probably some time is going to be needed before a top is confirmed. Let's look at some of the markets. The NYSE Composite, the weekly, shows that the AD line did turn up this week. Very strong close. The NYSE Composite was up 3.55% for the week. A pretty bullish development. Looking at the SPY, the spider tracking the S&P 500, surged to a massive new high, as expected, traded above 6,000 in some of the futures markets, and more is likely ahead. AD line has turned up, not yet exceeded that high, shows a very bullish trend. The stocks only AD line is agreeing with the stocks with the all AD line, also pointing higher. Good news for the QQQ. The weekly chart shows that we hit the yearly R2 at 512.48. We closed at 514.14 and up 5.5% for the week. That's consistent with this action we've been talking about for the past couple months, really, about the AD line. This arrow, suggested during the summer that the uptrend had resumed. All the worries about a September decline. The AD line said, no, not going to get one this year, and we didn't. AD line looks strong. Relative percent, it's not taken off yet, but it's positive. It's above its moving average, indicating that it is outperforming the S&P. The daily chart for the Qs also looks pretty strong. Convincing new high in the daily AD line. It pulled back a little bit on Friday, so we certainly can see more of a pullback. You can see we're bumping into the Stark bands. Hit the monthly R2 was at 511. We exceeded that. And the RS on a daily basis, it broke out ahead of the election. Now it's showing a pattern of higher lows and higher highs. That's good for the tech sector. Over the past couple of weeks, we've been talking about the action of the VIX and the VXN, which measures the volatility. When it's rising like it was July and August, this spike you can see, it's generally negative for stocks as volatility in the option markets increases and more puts are being purchased. So you can see that we're looking to see if there's a substantial break above these resistance to turn us more cautious. We didn't get it. Instead, they both plunged. As I teach my students, it's important to keep an eye on the put-call ratios. Oftentimes, they give you no information. I found very low values are often not helpful. But you can see last week, we had a spurt to the upside on the 4th, right ahead of the election. This indicates that 40% more puts or 34% more puts were bought overall, and in the index it was 1.9. That was a very bearish sign, and the option traders were betting on a big decline, and that's bullish for the stock market. There had also been signs of deteriorations in the stocks making new highs and new lows. You can see here the new highs had diverging. In September they peaked, lower highs in October. That was taken care of last week as they surged, as I noted to clients in a special update. We never got a significant big push to the upside in the number of stocks making new lows, so the deterioration of the new highs was not a sell signal. Look at the NASDAQ composite, same story. We had a pick up a little bit here, up to 200, but we're looking for this peak, and you can see that over 650 or so new highs in the NASDAQ composite on the election rally. Our portfolio has been skewed to the long side of the market since we got new buy signals in the middle of September. It was a pretty good week. The banks and the regional banks up close to 10%. Consumer discretionary, cloud is a good winner, up 7%, etc. You go on the website, you'll see a full list of our portfolio and where our stops are. So a lot of this was based on the sector analysis. Let's look at it now. In our ETF weekly review, you can see that 73.8 closed of the ETFs closed above their pivots, up sharply from 57. New buy signals and biotech, leverage QQQ, momentum ETF, energy, and healthcare, as well as aerospace and defense. You can see this chart of the intraday chart of the SPXL. That's a triple long. We got a nice buy signal here on Tuesday, as we did in the futures, and had quite a run to the upside. In terms of changes, 4 ETFs closed with readings above 50%. Energy jumped back to 58.3, so that's one we're watching this week. 50% in XLI and XLY. They were below 50 last week, so we're kind of watching those. The ones that look we really like, XLF as well as XLK. XLF is at 90.9, 58.3 on XLK, and XLC been one of our Teflon sectors for a couple of years, up 90 to 91.7. Okay, so and 5 sector ETFs were up over 5% last week. XLY 7.5, XLE 6.5, etc., etc. So it was one of the strongest days or strongest weeks in the stock market for a couple of years. You can see from our table on the T&J watch list and Jerry's excellent work, you can see that pretty much consumer staples and healthcare are still below their quarterly pivots. Everything else looks pretty good. Lots of new 3-day buys in technology, industrials, QQQ, etc., etc., even down to the semiconductors had a nice pop, and still some areas that we're watching for new signs. There's a daily buy in staples. It looks one of the weakest, and in real estate. Healthcare is positive on daily, so we'll be looking to see if we get a 3 DTS there. One of the main things I like about stock charts, though I receive no remuneration if you should be a subscriber, is these candle charts. You can put your whole portfolio up to 12 in this, and it's a really quick way to keep track of what your positions are doing. This is as of Friday's close, so the Vanguard value had pulled back to support, gapped higher, moved sharply to the upside. VTI is a global total market for the world. You can see maybe signs of a bottom here in healthcare, XLF, and then of course we have the banks down here, this massive move to the upside. So lots of nice charts. Cloud has been a real good one for us as well. Looking at the growth gauge, 90% above the quarterly pivot, including home builders, ITB. It's still weekly negative, but it has flashed a daily buy. So that's one. It's had quite the setback. Probably will need that 10-year yield note to start to pick up some steam and drop. We're watching for new entries. A lot of the home builders have been hammered. Value, quarterly pivot in the energies, still not a lot of triggers. Vanguard, the VDE gave a weekly DTS, and the daily or DTS are positive here. So XLB and XOP we're watching. XLE is positive across the board. And of course all the short ETFs, leveraged short, are negative. Still should be not in those as opposed to in the leveraged long, which are 100% across the board. If you look at the energy sector, you can see a lot more green here happening. Hess, etc. Schlumberger, 3 DTS signals. So some interesting stuff to look there. It's out of favor, and of course, the impact of the new president remains to be seen. But the energy markets follows its own master. Materials, Sherwin-Williams picked up positive, as did NUE. Industrials, Honeywell, Caterpillar. I think we talked about those last week. Consumer discretionary, Orly is back in the news. McDonald's may have overcome its problems, and also Starbucks is trying to rebound. Pretty much a lot of things rebounded. So Costco, both a weekly and a 3 DTS for the consumer staples. Healthcare still looks pretty red. United Healthcare had some positive signals there. So, and Amgen, we have a position in Abbott that's still green. Hasn't done all that much, but it's held up. Financials, gangbusters. Pretty much, Berkshire Hathaway, everything across the board. Information technology, Intuit, Oracle, Broadcom rather. CRM gave it, is positive across the board. Communication services, also very strong. Charter communications here, not a lot of negative there. Utilities, 58% above the quarterly pivot, only 33% 3 DTS. So a lot of the utilities are still looking negative. Also, the REITs, 41.7. So it's, if we start to see a couple of daily DTS, so if that starts to spread, we may look back at them. Lastly, look at the themes report. Cybersecurity, FTNT is a stock holding we've had for the Viper stock. It surged on earnings, over 20% where we got in there, and we were patient with that one, and it paid off. We're looking at some other in that area. I think will be a good winner for the end of the year. Genomics, healthcare, a lot of red there. Neuroscience, Alkereem's is okay, but also nothing new green. Self-drive also got problems, obviously. And energy transition, copper, kind of a mixed bag here. A daily DTS and a 3-day DTS. Freeport McMoran, same bellwether, and it's only weekly. So, are we going to get flips to weekly sells in those? Could be. We'll see. And then we switch down Grand Transport, CSX, a green all the way across the board, and was up 1.24% last week. Air Transport, look in the retail, Costco again here. Hilton had a nice 3 DTS. So, maybe the travel field is going to come back now that people feel better about what's going to happen in politics in the year ahead. Aerospace, as I said, it's got some positive signs here. The ITA, is a ETF on that, and it did flash positive. Winding up here, oil and gas gauge, same sort of thing. COP, EDG, or EOG rather, and XOM. And then, the NQ's largest, Broadcom is new green 3 DTS, and Apple held up pretty well, but it and Microsoft is about the only red. Dow had a 1,500 point shot at the upside. One of the best I've seen in many years. United Healthcare, looks a little more interesting there. Amgen and Caterpillar also in 3 new DTS. So those are the ones I'd be watching as we head into the next week. One of the hot markets has been the financials. It's XLF, a chart from one of my teaching sessions last week, and you can see that it had a really nice spurt to the upside here up to 49.68, and pulled back to 48.66. So you kind of target, that and the major averages. Look like we could see some consolidation next week or a pullback, but this sort of analysis we do feature in the Viper ETF report. The hourly, it can give you some really good ideas in terms of if you're into buying call options or puts. That was a pretty good trade. A few new things up on the Viper report. Strategies on buying a dip. Those will become increasingly helpful as we go into the year end. How to avoid bear traps. Recent article about strategists raising their targets, and of course, thing about my advanced decline line course. If you're interested, I think maybe if you're watching the videos in the past couple months, or even the start of the year, they've been pretty much telling you to be in stocks and don't worry about the recessionary fears and all the other things. And I think that's the right play. This course will give you a good introduction, and you'll have a better understanding of the markets than a lot of the experts you see on TV. So you can find it on viperreport.com. Hope you have a great week ahead. And as always, send me your feedback at tom@viperreport.com.